When asked yesterday at the press conference, will you step down if asked by Trump, he says no. He said it twice. He then reiterated it's not allowed under the law, not just me, but other members of the Fed. I mean, he obviously feels, does he, that the Fed's independence needs defending at this point?
I think that was certainly the message that people took away from it. I mean, it's quite astonishing, really. You know, we're very used to seeing central bankers giving us very academic, thoughtful answers. And he was so declarative and so blunt in his kind of assessment of what he would do in that circumstance. And I think that, you know, bears some kind of consideration, because I think that is exactly the question that markets have been asking, you know, about a kind of Trump presidency. What does this mean for kind of Fed independence? And I think Powell very much wanted to quash any concerns that people might have that could ultimately impact asset prices, that the Fed would be anything other than independent as it has been so far.
This is about the banking sector, though, isn't it? This is about Barr. It's not about Powell. Firing Powell's really hard. Firing Barr, there could be a legal route to that, but he's effectively putting Barr under the same umbrella as everybody else, and that sets the fight up. How far is he prepared to go, do you think? How big a conflict could we see? And that's got to be negative. If there is a conflict between the Fed and the presidency, that has to be a negative for the United States and the dollar.
Yeah, and I think also for kind of treasuries as well. I mean, like, people need to kind of see sort of, you know, certainty in institutions to feel confident in the US as kind of like a home for capital. You know, obviously the dollar is the world's reserve currency. When things start to kind of sort of challenge whether the US is kind of, you know, kind of the city on the hill that people kind of see as being sort of the beacon for the kind of financial markets, then that does kind of have a ripple effect through to those asset prices. So I think it's going to be interesting to see how he kind of does it. This is definitely a first early shot across the bow, getting out in front of things. It remains to be seen whether we get any kind of, you know, fire back from the other side, as it were.
So politics aside, he also talked about the risk of inflation and uptick, and we've been talking about this for a year now. And in the last week, we've started to see the 10-year, for example, inch dangerously close to that 5% level again. Is 5% back in play?
Definitely, yes. People are very much talking about 5% as kind of one of those sort of areas where we could see kind of the 10-year sort of trending back up towards. Obviously, there's a long way to go. We're not anywhere in that kind of ballpark yet, but that's the thing that's starting to come through in a lot of kind of the strategists that we talk to and investment managers, that 5% could very much be back in play.
But over what time frame?
That's a good question. I think we need to see some of these policies coming through from the new administration to see whether they are as inflationary as people see. We've already seen a large backup in yield, so it feels like any kind of extension in the near term might be a little bit premature. But once we start to see kind of those policies coming through, tax cuts and the like, that could be the thing that really sort of starts igniting the yields going higher.